We have established various research objectives to ensure that the study is carried out in accordance with the stated goals. Among the objectives to be met are: first, to comprehend the meaning and concept of unit trust. Second, to analyze unit trust public mutual in Malaysia. Third, to investigate the performance of unit trust and the risks associated with unit trust. And lastly, what is the advantage and disadvantage of unit trust? First, we must know what is it mean by unit trust. Unit trust is a collective investment instrument where funds are pooled together and used to invest in a portfolio of securities or other assets. And they will managed by a professional fund manager where he or she is responsible to invest the funds into a portfolio of assets like cash, bonds and deposits, shares, real estate and even commodities. The fund is divided into a small pieces called units. Investor will invest into the funds by buying up these units. In Sharia terms, however, a unit trust is a Sharia-compliant collective investment structure that allows participants with identical financial goals to pool their funds. Professional fund manager will invest this money in a Sharia-compliant portfolio of securities in accordance with the fund's aim and investment plan. Some aim to produce a regular income while others aim for growth. How they invest determines how much risk they are taking with your savings. Next, we go to the Public Mutual Berhad. Public Mutual Berhad is a unit trust management company owned by public bank. Just like the others bank, they have their own unit trust management arm, such as Kenanga have Kenanga Investor Berhad. Afin Bank has Afin Huang Asset Management, and CIMB Bank have a principal. Most banks have their own unit trust management company. Under Public Mutual Berhad, they manage about 147 unit trust funds. For the next point, Public Mutual Fund is the #1 unit trust company in Malaysia. This is said because Public Mutual is certainly the #1 in Malaysia. This is in terms of total fund size managed amongst private unit trust companies and private retirement scheme provider in Malaysia. Public Mutual is one of the oldest fund management companies in Malaysia. Therefore, they have built a strong reputation together with a huge agency force to sell their product and also a strong leverage to reach out the customers through public bank. Public Mutual is certainly one of the most established private unit trust company in the market today. In Malaysia, in fact, when you mention about unit trust, many people will straight away think about Public Mutual Trust. As a unit trust investor, we choose Public Mutual to get the best out of the investment. Next, we go to the why should we invest in Public Mutual. First, professional managed in accordance with Sharia principle. Unit trusts are handled by full-time specialists who ensure that the monies invested generate the best return possible. Second, competitive returns. Competitive returns are unit trust returns that have been highly applying thus far. Returns of up to 12% are possible, and some funds even provide higher and better returns. There are times when the returns are less attractive, but long-term investing is far superior to fixed deposits. Third, effective of diversification to minimize risk and optimize return. The major benefit of a unit trust is risk diversification. Unit trust is invest in a variety of stocks, bonds, and assets, which might help to mitigate risk if a sector's performance isn't great. Other sectors' success will contribute to a strong return balance. Next is of transactions. Units that have been invested can be redeemed at any time. Within 10 days of receiving a public mutual confirmation, you will be able to get the cash worth of the sale too. Fifth, flexibility. There is no need to set aside time to deal with the fund investment. It sounds great, right? This is due to the fact that the fund manager in charge is in command of everything. So, we can set aside time for other activities. Sixth, regulated by Securities Commission Malaysia, which is SC, and certified as Sharia compliant by independent Sharia advisor. As a return on your investment, Sharia compliant, which is unit trust, provide capital growth and or an income stream. Seventh, the power of compounding. Customers can invest in current fund scheme in public mutual with as little as RM1000 as the beginning stake. Additional investments are available at any time for as little as RM100. Lastly, peace of mind. Unit trusts assets are secure because the fund is not permitted to take out any loans in order to invest. Because the Securities Commission regulates a unit trust fund to protect investors' interests. This is the case.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Nadira binti Muhammad and my matric number is 2020984567. So I will continue the presentation by starting with the difference between conventional mutual funds and Sharia mutual funds. Okay, first is about DR management. The conventional mutual funds is only based on the principles contained in the investment contract and they are supervised by DOJK only, which is Financial Service Authority. Meanwhile, for Sharia mutual funds, they are based on Sharia and Islamic guidelines and there is no elements that are prohibited by Islam, which is gharar, maisir and riba, and they are supervised and monitored by the Sharia Supervisory Board, DPS, and also by DOJK. Second, cleaning process. For conventional mutual funds, there is no segregation in halal and non-halal matters. It means that there is no separation between halal and non-halal. Meanwhile, for the Sharia, the cleaning process is known as the cleansing process, which is the cleansing process in the Sharia system refers to the examination of whether the business conducted in a company is legal or not for its income. Third, securities for investment portfolios. All securities is allowed in conventional, meanwhile in Sharia only allowed in Sharia securities list, which is DES. And fourth, about profit sharing. In conventional mutual funds, they are based on interest rate developments in investment made. Meanwhile, for Sharia, they are based on Islamic Sharia and agreed by each party that involved or carrying out the investment. And the last one is about the contract. In conventional mutual funds is allowed in all matters including that are non-halal, and for Sharia they are including the contract of musyarakah, ijarah and mudarabah. The next slide is about public mutual Islamic fund. So public mutual has selected several Islamic funds that are in the top positions globally. The table shows about the performance of Islamic funds that are that were recorded on 29 October 2021. Okay, first under Equity Asia Pacific Islamic, which is PB Islamic Asia Strategic Sector Fund, their fund volatility class is high. 3-year fund volatility factor is 16.4 and their total return for 3 years is 61.71%. Second, Public Asia Ethical Fund, their fund volatility class is high. 3-year fund is 15.1 and the total return for 3 years is 53.42%. Second, under Equity Asia Pacific ex Japan Islamic, which is Public Islamic Asia Leaders Equity Fund, their fund volatility class is high. 3-year fund is 17.5 and total return for 3 years is 64.8. Second is Public Islamic Optimal Equity Fund. Fund volatility class is very high and 3-year fund volatility factor is 17.7 and their total return is 62.38. And last is Public Islamic Asia Dividend Fund. Their fund volatility class is high and 3-year fund is 50.3 and total return is 48.98%. And for Equity Asian Islamic is Public Islamic Asian Growth Fund and their fund volatility class is high and 3-year fund is 17 and total return is 38.58%. And the last one is under Equity Global Islamic, which is Public Islamic Global Equity Fund and their fund volatility class is high and 3-year fund is 14.9 and their total return for 3 years is 78.8%. Next, as I already mentioned earlier, there are 7 Islamic funds that are in the top position, but we are focused on Islamic funds that are in the first rank, which is PB Islamic Asia Strategic Sector Fund, and they have received award definitively per Fund Awards 2021 Equity Asia Pacific Malaysia Provident Funds for 3 and 5 years, and their fund size is 51.27 million ringgit, and their returns for period ended on 31 December 2020 for 3 years is 40.64%, for 5 years is 18.88%, and for 10 years is 133.7%. I think that's all from me. The next slide will be continued by the next presenter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Zakira Imana binti Zulfazli. My metric number is 2020950925. Okay, I would like to present my part in my group assignment, which is advantage, disadvantage, and also analysis of performance of unit trust. Okay, as you can see in my slide, which is advantage of unit trust. Okay, first is low capital investment, which is unit trust allow a person with a capital such as low as 1,000 ringgit to participate in the stock market with a very low risk compared to direct investment on Malaysia Stock Exchange. Therefore, it is affordable and easy for us to continue investing every month if we want. Okay, next is very high liquidity, which is in short time it is very easy for us to get cash from investment without being charged before the investment matured. With unit trust also, we can attract investment at any time based on the current price without any penalty. Okay, next is unit trust also save cost, which is each investment is subject to certain cost and tax. Payment in unit trust investment from the sale and management charge. The sale charge is between 5 to 6%, and the management charge about 1.5% per year. Okay, if we invest 1,000 ringgit, then the same charge is RM 47 ringgit, about 47 ringgit. Okay, that's mean only 952 ringgit out of 1,000 that we invest will actually be invested. Last but not least, unit trust also flexible. If for example, if investor need cash, they don't have to sell all of their investment shares. They only need to sell the amount that they need. It is different compared to other types of investment. Okay, next we move to unit trust disadvantage. First is there is only one way to buy, which is with individual stock and funds trade on exchange. Investor have many ways to buy unit trust. Investor also can buy them through dozing or whatever. But the downside of unit trust is just how much investor are willing to pay commissions. Investment must be purchased directly from the unit trust issuers, and the purchase price is not competitive. So this is a major shortage of unit trust that investor have to face. Okay, second is inflow. However, no inflow in currently exchange funds or mutual funds put current investor at a significant disadvantage. Inflow into unit trust can deluxe the share of profit investor have. The greater the trust, so more limited that management of investment opportunities. Okay, next is high tax payment. Okay, next is high tax payments. Investors need to remember that even if they do not pay for this management unit trust, the fees associated with this product are comparable to the burden of mutual funds. The lack of unit trust is also often higher tax. The higher tax, the greater the profit they get from the return on investment over time. Next is no change in holding. The last but not least for disadvantage of unit trust is no change in holding, which is one of the most obvious difference is that once a unit trust is formed, it is underlying holding remain the same until its termination date. This is an advantage if the holding perform well or not, but if their value falls, investor will usually lose money. So this is also among the shortcomings of unit trust that the agents did not tell us. Next is analysis of performance. As we know, unit trust in public mutual have many, so which is based on Sharia and not. But in our assignment, we choose with based on Sharia, and we only choose one, which is PP Islamic Asia Strategic Sector Fund. Okay, as we can see in my slide, this is graph for report from 2017 to 2021, which is now. Okay, as we know, public mutual is the number one unit trust fund management company in Malaysia, which is under public mutual Berhad. It is the first unit trust fund management company in Malaysia because the size of the fund managed by public mutual from 2018 is 59.5%. Public mutual is under public bank Berhad, which is established for more than 40 years. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Aina Geometri Sri. My number is 2030973631. So I would like to continue this presentation about risk in unit trust investment. First, management risk. Before we want to investment, we should know how to manage in investment and also have acknowledged. This is because the performance of fund is dependent on experience, expertise, knowledge, and investment technique used by the fund management. For example, in experience, the more experience in the world of investing for a person, better the consideration of their risk and merit in investment. But it's more about the way we cope and management in investing. If fund management is weak, it can cause a loss on investment. Second, interest risk. Interest rate risk is probability that an asset will be depreciated due to unexpected interest rate fluctuation while investing. Interest rates are the main factor for a bond price in investment unit. For example, when interest rates go high or up, then the value of the fixed income securities and bonds will fall. In general, bond price can be viewed based on coupon, value, and time to maturity, and also if the bond has matured in the long time, it can change to a higher interest rate. Therefore, it has a higher interest rate risk, which can affect the price fluctuation as well as the investment price. Third, inflation risk. When interest rate in unit trust, we can expect dramatic condition and movement of either positive or negative return. In fact, the inflation rate and the risk rate are two key macroeconomic variables where it has a significant impact on the economy in general or the life and so on. In unit trust, even if a fund tries to maximize its return above the inflation rate, it is also likely that it will accrue loss. This is because the return to be over time is not comparable to inflation in the short run. So, 4. Liquidity risk. Every investment, liquidity is considered as one thing of element that greatly influence the interest of investor. If an asset can be converted into cash, the current market price, then the degree of liquidity is high. While investments that lack a level in liquidity are considered less attractive to investors. However, high liquidity has a low risk rate, while low liquidity has exposed it to high risk. Therefore, if a fund becomes illiquid or difficult to sell, then the fund manager may need to sell the security at the reasonable discount or deduction value, where it affects the value of the fund. Lastly, market risk. As we know, in the world investment, it depends on the economic situation on their country, regional or international, as well as government policy or political development. Market volatility and the internal fluctuation in the market rising from this thing can affect each unit invested, either falling or rising in the market price. So it also affects the income generated, whether it goes down or up. For example, the effect of pandemic COVID-19 has resulted in market price falling and causing the investment world to be slightly affected. Next slide is about preparation before making an investment in a unit trust in public mutual. First, we must have a clear investment objective. Investment objectives are important determining factor for success in your investment. Investor must first have a clear objective before investing in any unit of the fund. D is to ensure and identify the risk that you are capable of bearing, like an appropriate according to the ability of the level of the risk you choose. Second, understand our investment. Before we make a decision to invest in any fund, we should take a time to understand each fund and everything in investment. For example, the objective and key feature of the fund, such as its distribution policy, asset allocation, and risk exposure. This is ensure it is in line with investment requirement and risk profile. At the same time, we should take note of the fee and charge incurred when investing in unit trust fund. This is to avoid neglect. 3. Avoid market timing. As a unit trust investor, we should avoid setting the time of entry and exit from the market. We should stay investment for the long term or long time. This is to achieve long term financing goals and investor profit. We also need to allow professional fund management or fund manager to run mobilized invested unit trust through different market cycles. Number 4, do not allow emotion to impact investment decision. In the investment, if we want to invest in unit trust, we should get rid of the attitude of fear and greed in ourselves. This actually in investing in the ever beginning due to fear and greed. When this feeling then we may make irrational decision where investor age in hasty buying and selling during the fluctuation of the market cycle without studying clearly and not looking at record and even data of up or down. Number 5 is diversify portfolio. Diversification is one of the ways that can help us reduce risk in investing and get a profit. There are various ways that can be used for diversification, whether it is a diversifying asset class or investment instrument. As investor, we need to stick to the word. Do not put all your eggs in one basket. This is because we do not know what will happen. Maybe the market price change from time to time, but according to the current market and others. Lastly, the next slide is about conclusion. In conclusion, a unit trust is a fund that allows individual unit owner to hold asset and make a profit directly, while a mutual fund is an investment which consists of a sum of money collected from investors who are responsible for researching and managing various securities such as bond and equity. However, private mutual is also a subsidiary of public bank, which is offer various unit trust funds, especially those that are Sharia compliant and based on the concept of principal fund in Islam. In addition, with the availability of Sharia compliant unit trust, it can meet various needs for investors. Various facility and advantage are available, such as competitive return, fairly effective way that can minimize any risk of incident and get optimal return, and so on. So that's all from my group. Thank you.